Hello, everybody. How are you guys doing? It's Thursday afternoon. I hope you had your lunch already and you are ready and hyped for what is going to come up in about 25 minutes, the ECB interest rate decision. And just like 2 weeks ago, where we were trading, is my mic on, by the way? Yeah, this. When we were trading the US inflation data release, we want to do some live trading today as well. So we are going to spend now the time until shortly upon the release of the ECB decision, which is going to be here at 2:15 CET, so 12:15 UTC. So I can walk you guys a little bit through what I've planned here in terms of positioning, what I think is going to happen, and so on and so forth. And then we are going to watch the event together and hope that we made some nice decisions again when it comes to trading, right? Excuse me. Good. So first things first here, as always, guys. Hello, everybody. Good to see you. You have, of course, the opportunity here to also chat with me. So if you have any questions, any comments, any concerns, and so on and so forth, feel free, just fire away. Of course, I'm going to answer some of these questions. All of these questions depends on how many questions there are today. And then let's see if we can do some magic today. So let me maybe make my screen a bit bigger so you guys can see better. Also, remember, guys, to leave us a like, to subscribe to this channel. This is, for me, of course, always the most important thing to happen from your side. And yes, I would like to start maybe on what we are expecting today from this interest rate decision and why I think it's going to be quite a difficult event trading-wise today. For my opinion, the picture of what the markets would be doing probably for the inflation data released 2 weeks ago was much clearer. Nonetheless, I have some ideas, of course. And let's see here first what we are expecting after all. So for you guys, if you've never heard something of interest rate decisions, so the ECB basically is the European Central Bank, one of the mandate of the European Central Bank is to keep price stability. Now we've seen inflation rate rising for quite a bit to levels that we haven't had in 30-40 years anymore. Here in Germany, it's currently at 10.4, for example, the inflation rate year over year, 10.4%. And one of the vehicles central banks have, or actually almost the only vehicle, is that they can raise interest rates. And it's very much expected today that the ECB is going to do so by raising the interest rate from 1.25% to 2%. So by 0.75%. This is the market expectation. Anything below that or anything above that is for sure going to cause a lot of volatility. And the volatility we are going to see are, of course, also mainly going to be probably currency based. So we want to concentrate, with one exception today, really on what will be going on, for example, here with euro dollar after the release. If you don't want to trade euro dollar, you can, of course, trade any other currency pair as well that is somehow with US dollar and or at least with euro. However, euro dollar, of course, being the most liquid trading pair out there, this is the one we want to concentrate on today. At least I want to concentrate on this one. I hope everybody has their accounts also ready. Of course, we still have some promo codes. If you want to trade today with us, you can use some promo codes. One that is still valid for actually just 3 more days is our Academy October 22 promo code for 7% deposit. You guys will remember that's the one I used last time for the trading as well. Gave me some extra funds, you can use for margin trading as well. And another promo code you can use if you are interested in having a little bit of deduction on fees is our promo code called The Room, where you get 50% off in trading fees. And this is actually perfect for scalping the markets a little bit like, we tend to do in news events like this. So go ahead and use those now. And if you are not yet a member of a trading academy and a client of Prime XPT, you'll find everything that you need to start trading in the description of this video. A link to open an account. You'll automatically also become a member of the trading academy. Also, remember to join our Telegram channel, where I share my views on the markets, almost every day. And talking about the Telegram channel, we did a pretty cool thing where the other day I asked you guys, the beginning of the week, what are you guys expecting from the ECB today? Are they going to rise by 0%, 0.25, 0.5, 0.75%? Or maybe even 1% or higher? And also here, the wisdom of the crowd, so to say, says, almost 50% of you are also expecting a raise of 0.75% today. So anything out other than this is going to really, really cause some trouble on the markets. And this is something, hopefully, that the ECB wants to avoid. So maybe let's have a quick look at some charts before we start. And if you were following there on Telegram yesterday, we had this Bollinger squeeze pattern resolving itself finally. So just to quickly summarize, this is Bitcoin US dollar. You see here the red and green line are so-called Bollinger Bands, and whenever those contract, like they did by a heavy margin here, for example, it shows a level of low volatility. And sooner or later, you're going to have a quite violent breakout. What we didn't know is the breakout going to be to the north or to the south? It looks at the moment like the breakout is going to the north, and I've been getting ready to try to enter this breakout. Now, I do not want to enter it blindly, but what I did is I placed a buy limit order here at the closing of this breakout candle. So this is this one here. We're talking about this candle. So you can see here, I currently have a limit order ready to buy 3 Bitcoins with a limit price of 20,100. Now, why am I doing this? I'm doing this because a lot of times you will see that the price goes down to the closing price of a breakout candle first until it really takes off. And if I'm able to enter the market there, I'm going to have a very profitable risk-reward ratio, because I can put my stop loss then between 19,500 and 19,600, and I can have a target price between 21.5 and 22,000 US dollars, which means I have to risk something like $600 or $700 in order to earn $1,800 or more. This is like statistically, mathematically, very much in my favor, because with trades like this, I could be wrong most of the time. I actually just need to be correct 38 to 40% of the time to not lose money. So my chance of winning with trades like this in the long term is, if mathematically speaking, higher than the outcomes of a coin flip. And this is exactly the type of trade I'm looking for. So this, however, is a long-term trade, depending on what the ECB is going to do now in 20 minutes. It could be triggered actually today. Much more interesting, of course, in my opinion, is what we are seeing here in euro dollar. And I want to look at this actually from 2 angles, because this is going to be the main vehicle for my trading today. Now, as you guys know, if you've been following me a little bit over the course of the last month, you know that I was always super bullish on the US dollar, meaning euro dollar going down is one of my best trades really I did this year. I've been following this trend here down in euro dollar and opened my trades always when we came and struck this higher trend line here in euro dollar. And I used to also short euro dollar always when it came back to 1.0. Now we have gone over this yesterday, and this is a little bit what is spoiling, to be honest, for me, the party here at the moment, that this move that I was anticipating is going to be caused by the ECB raising the interest rates has already been done basically in the past 3 days. So we saw the price for euro dollar in the past 4 days. This is actually, so this is the 5th day, fifth day rising from 0.97 to over 1.0 where we are now. Normally, I would have expected this to happen after the interest rate decision. Why after the interest rate decision? Because higher interest rates in the Eurozone also mean there's more capital attracted again to the Eurozone and withdrawn from the United States. But I don't want to go too far now and all this macroeconomic stuff that is going on there behind the scenes. What we can do, however, is we can have a look at what did actually happen last time when the ECB raised the interest rates. And that's not so long ago, but it was actually on the 8th of September. And what we saw there is, hold on a second, here we go. What we saw there, so this is the red line here on the chart. That was the exact time, this is a 50-minute charts, by the way. This was the exact time the ECB did this interest rate decision on the 8th of September. You can see in the following hour, we saw quite some massive sale here. It looks more massive actually than it was, I have to say. So euro dollar dropped by about 60, 70 pips. And then it started to recover and actually went quite strong for a couple of days. So we went all the way to 101 after this in the upcoming day, really, on the 9th of September. And this is quite interesting, because we potentially could see something like this again. If we look here what happened in the days before the interest rate decision, we also saw that we had quite some rising prices here. Look at this cluster here on shortly before the release of the data. So on the 7th and early hours of the 8th of September, now we also had rising prices. When the rate decision then came, people probably closed their position, took their winnings, and price went down because there's more supply than demand again. And after this one resolved itself, we saw prices going up in the following days. And I could imagine that we're kind of going to see something like this maybe today too. So I wouldn't be surprised. Let's maybe go here to a 5-minute chart on my trading on my trade account here too. And to see the first reaction, euro dollar going down and then over time recovering in the following days, because we are somewhat in a risk on segment again at the moment. You can also see this very well, in my opinion. If we look here at what the stock market has been doing, which has bounced off our soft landing zone that we defined actually months ago already, held very, very well and has been going up. Okay, the question, of course, is now, what shall we do? So my plan here is, and before I execute trades here, guys, I know this is live trading. You know, we are risking money here, but please, that does not mean you have to follow me blindly. It's 100% okay to disagree with me. Here, you have to make your own decision. This is by all means, please, no financial advice I'm giving you here. Also very important is, news events like this can be a kind of a coin flip situation. It's attractive to trade them and it's fun to trade them. I totally understand this, but I'm doing this with very, very small position sizes. I'm not using a lot of leverage or any leverage here at all, because if the reaction to the news is something unexpected, it can lead to very, very fast you losing money. And I don't want you to endanger your account because you maybe choose too high position sizes, or to end up losing money and be sad because you think you have to follow me by the word here. It's always important as a trader, make your own decision, never follow just somebody blindly, please. So that being said, what I want to do here is actually I want to open the first buy position now already. So I'm going to do this, going to send the order. I'm not going to put in a stop loss yet. Why don't I do this? Because I'm trading with quite a small size here in comparison to my account. So we have here the 30,000 on the account, and we still have another 282,000 there waiting at the sidelines, right? So this is not a huge position size. What I want to do is, if the immediate reaction is kind of like what we saw last time in the beginning of September, so that we really see euro dollar going down again, I want to stand there maybe 50, 60 pips lower than my entry rate now and try to catch another buy there. So I'm willing to kind of scale myself into the market. And then probably is going to be a waiting game. So it's very, very likely that we need to sit there at the sidelines, have our position, and then wait if the outcome is in our favor over the course of the next hours and maybe even over the next days. Very important also is the EC press conference, which is going to be in 45 minutes, so 30 minutes after the release. And we're not going to cover this today because this really goes into the details. But if you want to watch that one thing you need to have an eye on there is the exact words they are using there. And the problem of the ECB really is at the moment that they have handed out basically 2.1 trillion euros of ultra cheap loans to commercial banks with almost 0% interest rate. And because they have raised the interest rates now to already 1.25% or potentially 2% today, what happens now is that those commercial banks take the money, the ECB loan to them for 0% and park it at the ECB for 2%. That's a nice game. No, I would like to do that too. Take a loan for 0% and then give it to somebody and get 2% for that. You make basically money out of thin air with this. And the market participants, especially the professional ones, are going to very, very closely look at the wording, how the ECB wants to address this issue. So I'm, of course, going to write a little bit on the Telegram channel about this tonight as well. But bear in mind, this is probably even more important than the decision itself. Because I honestly think there's probably not going to be very much of a surprise there. Waiting for us. But if the outcome is negative, maybe we are also lucky and I get flushed into my long trade in Bitcoin there. Let's see how things are. All right, good. Enough talking by me already. Let's see if we have some questions. We still have 10 minutes to spare. I go here. Let's start with this one maybe here. From Kamran, nice to meet you. Welcome to the show. How long do you think the EU interest rates will continue? Do you expect the markets to recover after the EU interest rates ends? You mean them raising the interest rates? That's a very good question. And when we look at the market as a whole, financial markets, actually ECB is not that important. What is important is the Federal Reserve Bank in the USA. They are the ones the market is super much eyeing on. And the market is eyeing on them because usually the central banks around the world like to copy to some extent what the Federal Reserve Bank is doing. Now, very interesting, there was a statement last Friday by one members of this committee, of this Fed committee, saying that, yeah, we are probably going to raise, if it comes to me, I want to raise the interest rates by another 0.75%. And after this, we can take things a little bit easier and maybe go in steps of 0.25%, which then was interpreted by the market. Hey, the Fed is not going to raise the interest rates so much anymore in 2023, so let's all go into risky assets again. This is also why we saw, for example, this great performance suddenly of so-called risk-on assets, so of rising stock markets, here the S&P 500. And this was also the reason why we saw this breakout of Bitcoin, because cryptocurrencies are also perceived as so-called risk-on assets by the market. Excuse me. So this was the reason behind that. And I think that is going to continue, yes. To be very clear here, I've said now for months, I expect that we bottom out between mid-November and early to mid-December. Maybe we've bottomed out already a little bit earlier than anticipated. This is also why I've been always switching over the couple of the last months slowly my long-term portfolio back into stocks and back also especially into Bitcoin. But I could be wrong here, of course. If we see very bad inflation data now in November, of course, we are going to see this last maybe crash down then again. Could be. So we've seen also in the past, especially here for Bitcoin, that we tend to have fake outs sometimes like this. And one of them we, for example, had here, where I also said this looks like we are finally seeing the squeeze pattern resolving itself. And then it turned out to be a fake out. I don't even remember the news back then that led to prices falling again. I think it was something with Elon Musk. Once again, Elon Musk, the enemy of Bitcoin, one can think sometimes. Good. Where's my other window? Here we go. This kind of goes into the same direction. Where will crypto go when inflation continues to rise? If inflation really continues to rise, I don't believe it will. By the way, then cryptocurrency prices probably are going to stay down or go lower. Yeah, this is Lovskin's good question here. And again, even if Lagarde is hawkish and the euro rallies, if any unforeseen numbers are released with the GDP, so the gross domestic product, could the euro plumber and the dollar rally on top of the ECB? Yeah, that could be actually that could be happening, but I don't think we have. Oh yeah, we have GDP growth that you are right here in America. So this would be quite an interesting combination, right? So we have the interest rate rising, and then we suddenly see a weaker than expected growth here in the United States. So 50 minutes after the interest rate decision of the ECB. If that is worse than expected, for sure, we could see, in my opinion, probably the euro rally on top. So the euro would rally if it's worse than expected, in my opinion. If it's better than expected, for sure, we're going to see dollar rally, which would mean euro dollar down. So this is something we need to have an eye on for sure 50 minutes after that. Will there be a chance the euro dollar is going to, where's my window here again? Here we go. Will there be a chance that the euro dollar will touch 102 in the next few days? For sure. If we don't see any unexpected things, I very much favor like kind of something that we saw here on the 8th of September. So that maybe we see prices going down first, then we see a short rally, and this could go all the way up to 102. Why not? Although it's quite a big move, like 2% move for currencies in just 2 days, something you can really, really consider a large move. Okay, we only have 5 minutes, so I'm going to hurry a little bit through here now. Let's go back here to watch a little bit. So I'm going to go back here. So we see prices, dollar going a little bit stronger here for now. Inflation. I'm trying, of course, to find some questions here that we haven't covered already. Yeah, I like this question too. This is a good question from Night Online. Wouldn't raising the interest rates in Europe deepen the crisis? So wouldn't it put the cryptocurrency market in a big bottleneck? Yes, that's the problem. And it's especially a European problem because you have so many countries here with different economic powers. If you, for example, compare the economic power of, let's say, Germany, for example, which is kind of the economic engine still for Europe, with something like Italy or something like Portugal or even Spain, there's a discrepancy. So, and because we have a higher rate also of debt to GDP growth, for example, in Portugal and Spain, than we have in Germany, those countries that actually need low interest rates are much, much more hurt by higher interest rates because they already have a lot of debt. And suddenly, if they need to refinance that debt, they have to pay higher interest rates. This is really, really a special problem of the Eurozone. And this is also the main reason, in my opinion, why the ECB is so much behind in raising their interest rates than, for example, the Federal Reserve Bank. I don't want to change jobs with Christine Lagarde because I wouldn't know how to address that problem as well. Really, really big. So 3 minutes more. Let's see, maybe we can have one more question. I'm I'm really just browsing through here. Thanks so much for asking so many questions, guys. Nice. Yeah, what happens to the market if there's a war in Europe? Of course, the market will crash. The stock markets would crash. The euro as a currency would probably become next to worthless. So we would very quickly see the rate of euro dollar going down to maybe 0.9 or something like this. So let's please pray all that what we are seeing right now in terms of war close to Europe and in Europe is not going to escalate. I think we really have other problems than to think of trading if that should happen. Here, okay, one last question here. Does the ECB interest rate always bring volatility to the market, and which pair does it affect more badly? We are going in events like this, all important economic events and decisions, by the way, you're always going to see volatility usually when the outcome is different than it was expected. So in this case, if the ECB would raise maybe to just 1.75% or maybe to 2.25%, so different than the market expectation is, we would see huge volatility. I actually wouldn't be surprised today if we don't see like very much volatility. So if this kind of is a non-event until we see those durable good orders here at the GDP growth rate at 230, especially then the press conference later on. It's a bit of a gamble always, for sure, to find out what is the right thing to do here. So 1 more minute, 45 seconds. Yeah, very quickly here also, I like this question. Do you think that the support of 1.0 in euro dollar will be broken again, or will it be a strong support that the bulls will depend on? For sure, this is a psychological line in the sense. I'm 100% agree with you. But it hasn't been, in the past, has been acting quite nicely as a resistance. That's why I was shorting there. Maybe it's going to act as a support this time. We will see and get first indications in 10 seconds about this. So let's see here. Normally, daily FX takes a while until but we can see how maybe on our euro dollar chart. All right, 250 now. We're not seeing that much of market reaction yet. So maybe it's really going to be non-event. I'm going to change here to 1 minute now. Yeah, and you can see here it's blinking right now. So as expected, interest rate has been risen by 75 basis points to 2%. And yeah, it kind of, now we see a reaction here to the downside first. A little bit action. So the bears are probably going to try to attack this level at 1.0. But like I said, that's okay. So should we see prices? So first of all, should we break this support at 1.0 and then see prices maybe at 0.9950? I would be willing to add to my position here, because that would speak very much that we are maybe going to see something like we saw last time here on the 8th of September. But let's see first. It's not a huge reaction, really, to be honest here, guys. I mean, this is, I don't want to say a non-event so far, but this is not a huge reaction yet. So it seems like the first try to break the 1.0 to the downside has been deflected. Almost went here. Well, there was still 10 pips of space left. So let's see. We have to wait here a little bit how things are going to develop. It's kind of a non-event, really. So normally I would have expected much more volatility. Really, the sad thing here is that we saw so much action already in the stock market and in euro dollar in the last days. So I'm kind of banking as it's going up now again. Probably we have going to wait here really until the press conference to see what happens then, or like Loveskins, I think you were asking that earlier. Maybe we are going to be a little bit wiser after the GDP. The US GDP is going to be released in 13 minutes, and I would suggest we just going to wait that long and see if we get a little bit smarter and get indication after, especially the second one here, this GDP growth rate is going to be released, because it's looking quite strong, actually, the expectation there for the USA. If it's worse than expected, for sure it's going to help euro dollar up. If it's better than expected, maybe then we have our case where things go down. But like I said, I mean, if we look here really now maybe at the daily candles, so at the daily chart, euro dollar, it's not much of really an event happening there, in my opinion. But for sure, you're going to see more volatility latest in what is that, 25 minutes, when the press conference starts. It's going to be interesting what Miss Lagarde has to say there, of course. And I want to stay live here for sure until the GDP growth rate, because that could give us a push in both directions. So now we are again here in the euro dollar where we started before the release of the numbers. Yeah, it's a bit of a non-event. Let's see if we have any more questions that we can kill some time for the next 12 minutes. So I'm going to scroll here to that. Yeah. Oops. That is not the one. Here, that one from Night Online again. News right now: European Central Bank increased interest rates by 75 basis points. So in line with expectations, like I said. And this is, it's a non-event, but it's okay. I, for myself, prefer actually if, events like this tend to not be surprising, because what financial markets usually do not like very much is surprises, especially bad surprises. And I kind of have the feeling that this GDP growth rate in 10 minutes could be a bad surprise. So right now, what is the outcome is actually good, because it's in line with expectation. The market might tend to continue what it has been doing in the last days, meaning risk on moves, which would mean Bitcoin higher, which would mean stocks higher, which would mean euro dollar higher, and so on and so forth. So let me see. Yeah. Will the Bitcoin price be too volatile in the near term after the release of the CPI index? CPI index, the inflation index, that is the consumer price index, that stands for. This is something I believe, have 2 weeks down the line, if I'm not completely wrong, again, for America, and that for sure is going to be a big event again. I have to see if we get the chance where I will, of course, cover that one live again as well. Also, mainly, of course, because last time we had quite some nice profits with this one. But let's see first. I'm going to be traveling a little bit, so I'm going to be in Southeast Asia for the next weeks, going to Indonesia, going to visit Singapore, going to visit Malaysia. So if you are from that area and you want to have a chat or meet up, you can also write me, please, to academy@primexpt.com. Where do I have this? Here, to this one. Feel free to write to me if I can find some time. Of course, I'm always happy to meet up with fellow traders then as well. Good. Wilson Moore, I'm new to trading. Welcome. Everybody starts somewhere. Good that you made the first steps with trading already. How can I make a more profitable investment in crypto without incurring much losses? That is the holy grail of questions also. And this is, of course, something every trader out there is always striving to. I've been doing this for 25 years now. And first of all, losses are part of the game. The trick is that the losses are not supposed to kill your account. So first of all, try to not risk more than 0.5 to 2% of your account balance per trade. And it doesn't really matter if you have a big account or if you have a low account, because for the first months, you need to find a trading approach where that helps you to not lose money. So in the beginning, it's not about earning money, it's about not losing money in the beginning. And the whole endeavor of this trading academy here that I'm doing is to help you to find the suitable strategy for you. So there are no holy grail indicator strategies that if you follow them by the book are guaranteed to make your money. The system, the financial markets are too complex for that. And I know there are people out there that try to sell things like this. I have this indicator, and if you use this indicator, you're going to earn money. There's more to it. So before you start risking real money, I very much would invite you, watch my videos, follow my trading course. We have something they called a crypto trading crash course, where I introduce some ideas. Join the Telegram channel, and if you then get comfortable with all the terms and with trading over time, then you can start risking some real money. But it's like learning a language. When you learn a new language, you also don't learn it within 2 days. You probably also don't learn it within 5 or 6 months, because I mean, if you have like 10 hours a day to spare to learn a new language, maybe you could be fluent in 6 months. But usually it's a longer term endeavor to do something like this. And this is the same with trading. So the more educated you get about trading, the more time you spend developing your strategies and testing your strategies, the more likely you will be to succeed. It's a business, and it's a hard business. So please do not fall for anybody out there making false promises, and please also make sure that you see this as a long-term thing. I'm seeing right now, yeah, we are attacking here right now 1.0 again. I think we were a little bit lower already there shortly, but I can actually zoom in a bit now. Here, like this, we can see things a little bit better, and I'm going to make this window also larger. Yeah, but still deflected. No? So it seems to be quite a nice support there at the moment. I wish we would go actually a bit lower, because I would love to buy some more euro dollar at 0.9950, because right now, of course, this is just a teeny tiny position we're having here. And not much volatility, surprisingly, for an event like this. The questions come pouring in. Sorry, guys, if I overlook your question here, please do me a favor. If I didn't attend to your question, you can also leave it as a comment underneath the YouTube video later. And then for sure, I'm going to get back to you and answer this. So here we have Ibrahim asks, the EU interest rate rise with 0.75. Do you think it will be the end of a bearish market? As long as we see interest rate hikes, it's not going to be the end of a bearish market. However, more important here is that first we are going to see inflation coming down. And we are seeing that already, at least in the USA. We were over 9% inflation. We see it coming down. And historically speaking, if I look at the past 60, 70 years, whenever we had the scenario that we had very high inflation, so somewhere north of 6 or 7%, that started to come down, that also coincided normally with the bottom of the bear market for stocks. A bottom of a bear market for stocks automatically would also mean sorry, I lost track here. Would also mean the bottom of a bear market for cryptocurrencies. I personally expect this to happen now in the upcoming 2 months, so somewhere in November or December. And so 2023, we are maybe going to see some rate hikes, because the reaction with these rate hikes are they are always behind the curve. So the ECB always is reacting to the reality of a couple of months ago. And this is why it's, in my opinion, also more important to look at the inflation, because if you see inflation coming down, you can be sure a couple of months down the road, the central banks are going to react also to that by stabilizing the interest rates, or maybe even lowering the interest rates again. And this is what I mean by a complex system. Yeah. Carl is asking, by the way, I think we Yeah, we broke under parity now. So maybe we're going to get some action here after all. In 3 minutes until the release of the gross domestic product in the USA. So it's going to be interesting. Maybe after all, we still can enter the market there at 0.9950, but it's still 45 pips until then. So a little bit way to go there. And yeah, since we still have 3 minutes, we can attend to Carl's question here. If the ECB makes a negative statement, can we lose all the current rise? Yeah, for sure. So what the market will look at is that the ECB in the statement is going to appear as if they have a situation under control. And if they don't appear to be like this, we for sure could very quickly also go to 0.99 or lower than 0.99. And that probably would be the time where then it's also time to take a loss in our small position here. But time will tell there. How long? 2 minutes still. So what really we are seeing at the moment is still kind of the same reaction like we saw in September here. Yeah, if this continues, it's a bit like what we saw in September, and if this pattern repeats itself, this is what I'm kind of banking on at the moment. Then after the low, we should see a nice rise over 1.0 again, maybe to 1.01, maybe even to 1.02, like somebody suggested there earlier. Good. How late is it? 1 more minute to go here. So maybe things are getting exciting. Time to open long or short on euro. Like I said, my game plan is here. I opened before that a long, and my game plan is, should we see prices around 0.9950, I would add another position to that, because then it would look to me like we are seeing what we saw here on the 8th of September. If that doesn't happen, we continue lower, then I'm going to close the position and take a loss. And it's probably going to resolve itself in, latest about 50 minutes from now. But now let's see first the release of a gross domestic product here for the USA. So, this one. If you go short, take profit at 0.98. Yeah, why not? Sounds like a plan. It's super good that you make up your own mind also there, by the way. I like this. This is why I said, all right, let's see first durable goods orders and GDP growth should come in. Worse than expected, the orders. I want to see the growth. I think this is much more interesting. Where is it? Maybe I reload here quickly. Does anybody have the number already? We see parity is gone back. I would probably expect when the number came a little bit worse than expected. Okay, I go here to overview and reload this. I really, really like this homepage, this daily FX page, but on the release of news data, sometimes they're a little bit slow. Anybody seen how that was? 2.6, so better than expected. All right, not bad. Kind of surprising. Then I would almost say, yeah, here we go. Now it loads here as well. 2.6%. That's not bad. Not bad at all. Much better than expected. However, not the orders for durable goods are a bit worse than expected. So maybe it's balancing out there a little bit. And yeah, we are back over parity here again. Euro dollar. So yeah, by the end of the day now, we have to wait until the interest rate decision, guys. And if you want to know about the outcome, not the interest rate decision, sorry, the press conference, which is going to start in 15 minutes. As I said, I'm going to cover this later on the Telegram channel and write a summary about this, write what, in my opinion, the outcome would be of this. Of course, I'm going to continue also monitoring this position on Telegram. So again, if you are not a member of our Telegram channel, look into the description of this video. Join us quickly on Telegram so you can stay updated. It was a bit of a non-event, in my opinion. Was a bit of a non-event in my opinion, this whole thing today. But let's see how the next hours and days are really going to resolve there. Sometimes you see a lag in the reaction of a market to an actual number, and we're probably going to see that in the next couple of hours, the next couple of days. By the way, I want to have a quick look. Bitcoin also didn't move much. I was kind of hoping, of course, if we see euro dollar falling, that maybe we are going to touch the 20,100. I've made my decision here how I want to position myself. Of course, the more important position here is the Bitcoin US dollar position. Nonetheless, of course, I'm going to update you here later on Telegram. Was a pleasure to have you guys all here. Very, very happy about this. Remember to secure your positions, please, always with a stop loss. Don't risk being blown out of your account just because there's sudden volatility in the market. And yeah, I'm going to see you again latest next week. Take care, everybody. Thank you for watching and being with me here today, and see you soon.